So, as usual, I figure I'd give a little bit of a heads up to what's going on as far as data goes on the meme stocks. I personally I don't hold a position in any of them, any of the ones I'm going to be talking about. I haven't really played them for a bit. The last time I did play them was obviously on the down with puts. So I'm going to try to just briefly go over the data to, share it with people out there that aren't ill-informed, maybe being misled or whatnot. As always, I have no qualifications. I'm not a financial advisor. I'm more of a data guy, so I'm just sharing what I have and briefly talking about it, and that'll be it. Just so we get it out the way, I want to go over some the more tinfoil based stuff that's been going around. A lot of people have been sharing this, which is like a chart of the AMC fails to deliver, and that's all fine and dandy. That they're, according to some people, high numbers. Some people are taking them and adding them all up, which is incorrect as well. But I'm not get into intricacies of that. I'm just going to show you guys another source of where you can get your data that might be in an easier to read format for some people that are more like visual learners. So it's this website you can see on my screen here. I'll try to link all of them below in the links below. And I'm going to show you something. So I'm just going to grab what the most recent bit of time that we're in right now, which is basically from the beginning of the year to now. And if you notice, the FTDs right now on this one are 103,000. Some people want to say, oh wow, that's a lot. It's actually not if you look in the grand scale of things, because back here, before it popped off to the price of 60 whatever dollars, it was way higher, like magnitudes higher. And that's the kind of things that people need to be look out for. This is 27 million FTDs. So compared to now, it's very low. And failure to deliver sometimes have influence on price movement. It depends on how available the shares and what the borrow rate might be. That being said, just to show you guys, here's GME in the current time, which again, they're pretty low. 46,000 is not that much. Back in January, they got as high as 3 million. So again, not as high as before. Here's BBBY as of recently. Again, comparable to recent time, not as high, but always keep an eye on this. Like that's what it's for. And if you'll notice, there's like some correlation to every time there's a huge peak of FTDs, there's a price spike later. But if they're getting lower and lower, and if the price of the stock is dropping, well, you can cover your short without taking, if anything, you're taking profits. You're not taking a loss at all. Addressing something else, which is everyone is goes crazy about the ETFs and stuff like that. And it's like the main one they cry out about is XRT, which they say, oh look, it's over 100% and shorted. And it's like, well, first of all, it's an ETF. Second of all, at one point it was over 1,000, I think 1,400 or something like that, and now it's way back lower. And that should say a lot to people. It's maybe not what people were hoping it to be, like this silver bullet. This is XRT Holdings, which you can go and look at this stuff. And you can click on download all holdings down here for daily. And the thing I always try to point out is if you look at how many shares there are, it's only 59,000, which the weight is low. So when you go look at shares available to borrow, there's some moment in time there where you can find those shares. It's not that hard. That being said, the fee is dropping. You can check it on Fintel or iBorrow. It's dropping a little bit. The same thing with the fee for AMC, not to mention the amount of shares available are higher. The fee's going up up and down a little bit on BBBY, but it's not significant enough to cause any sort of rough upside growth. So another one is you can look up XRT here as well. And a couple weeks ago, everybody was going crazy because XRT was, it had spiked quite a few FTDs, and I believe it was here. But again, nothing really came of it, again, not the silver bullet that everyone thought. So now we're way down here, which is nothing compared to that. So you got to look at this stuff and make sure you're doing your due diligence. I just want to talk about something I picked up. So I pay for a service that's got options flow, darkpool data, things like that. I like this tool, and it picked up this flow right here, which that's the one that I found interesting because we're already in the overall market is bearish. And then over here on Friday close, and they snuck in right at the close, strike 100 puts, and it was roughly a little, over 500,000. So that's when it catches my attention. And that's when I go look, and if you notice, a lot of puts snuck in a close right here on this. This is the 6th. I have it filtered for the 6th. And then, it hit into money for the contract at the time. So there's something definitely going on as far as the amount of money being moved on that stock. Just to share a little bit more data with you guys, I'm going to show you this, which is kind of the snapshot of where everything stands as of late. And a lot of people don't really, I feel like, and I'm generalizing a lot here, but they need to be driven more by data. They need to stop chasing this like the mythological unicorn type of deal. But this is the summary website of this service I use, and if you notice, the dark pool went from bullish to bearish. And if you notice, there's a lot of puts right now, money-wise, being put up against GME, and there's a little bit of support in the 60, 100 areas, but 90s, but it's got to be enough to over or outweigh the puts, which right now it doesn't seem like it's going to be happening anytime soon. Here's the AMC. Again, it seems like they'll buy occasionally and then just sell again. A lot of puts. It's kind of a similar story. And the BBBY is interesting because it had a lot of buying in dark pool, and then it just kind of dried up. There's still a lot of calls, less puts. So out of the three, this is a little bit more bullish. But again, the macro is kind of against all of this. The other thing I want to address is on the GME, just looking at I want to talk about the OI real quick, which is interesting to me because this is where everybody should be paying a little bit of attention. So if we look at the OI, right, and the current price is like 93 and change, I think, right? So if we look at this, and this is aggregate OI, and if you notice, 93 is roughly right around here. So anything to the right of here, is what you want to be propagated with a lot of calls, usually in the money or near the money and upward, right? And if you notice, the main bulk of things are 120 and higher. And this is, again, an aggregate view of all the dates. So it seems like we got to play like leapfrog in price discovery upward in order to get there. But that being said, there's a lot of puts weighing it down. Now, if we go and filter this to the 13th, you'll notice an interesting picture being drawn, which is there's a giant put wall at 97, but there's a lot of puts pulling it downward. The downside to this is the put wall at 97, and then you got another what looks like a put wall at 100. And it seems like all the calls are disconnected up here above both put walls. So again, not just trying to throw the data out there, and you interpret it how you like, but so far this does not seem very in the direction that most people that are long in this want it to be. That being said, it's got to be one of those things where you got to watch the macro for it to turn around. If the macro doesn't turn around, then nothing's gonna really help, because you could have a stellar ER and the macro will still pull you down. That being said, this is a super trend script, at least the one above. This one right here is a super trend script that I wrote. I've shared it before on my YouTube and my chart setup links and stuff. But basically, we never really broke out of that death cross. Once we got into a death cross here, we never really broke out over here. That was a fake out, a fake breakout. And ever since then, it's just been being rejected by the super trend. This is a moving, or an alive RSI script, I like to call it, which I've shared this before. This is not mine. This is by someone called When to Trade, I believe it is. And I've shared the link below on another video I made, but I'll compile these links and put them together. But basically right now, with the way things are stacked against this as far as put and calls go, if I were to stack this OI sideways here and pan out each level, it seems like we're going to have a tough time of it breaking upward past 100. Again, the macro isn't helping it. And I like to use the super trend script just to figure out what the overall direction is, or the overall trend of the stock might be. So that's the GME. Here's AMC, which again, it never broke out of the death cross over here. It got rejected. And this is on the daily time frame, of course. And then there's BBBY, which same thing. It was in a death cross. Talks and rumors of the buyout, the Ryan Cohen, all that jumped in and it spikes it up, but it gets rejected again. Again, this all having to do with the macro. When there's money thrown in on top of it, in the case of GME, what I showed you the end of Friday, there's a bunch of puts thrown in along with the macro tanking, so you have a lot of downside there. That's a lot of downside force. One last thing I wanted to share, which I think this needs to be spoken about personally. A lot of this isn't the type of movement that should surprise anybody. You should be able to somewhat, if you like reading charts and patterns and stuff like that, you should be able to somewhat kind of pick them out sometimes. Now, I always tell someone when they ask me, is it really reading the tea leaves, or is it astrology for males or whatever? Yes, it's sometimes frowned upon, but the reason why is because everyone draws lines on a chart and then say, hey, the stock has to go this way. For me, a chart is where a stock can go. Like it's a picture of what could be, but there are no guarantees unless you have, flow and dark pools and whatever in your favor. If you don't have that in your favor, then obviously the stock won't go there. I'm going to show you guys, that's another one I forgot to show you guys, which is the GME, AMC, and BBBY dark pool, which as of late, very bearish. I'm sure you can tell just by the color of the charts. But it flipped. So when you see at bids instead of at asks, that means, it's generally bearish. And then there's another one over here, that's GME. Here's AMC, which again, it has a couple flips here and there, but its overall trend is also bearish. And then BBBY, which is currently blank as of recent trades. The last trades were back on 420 and further back. Back to the topic I was talking about, which is charting. There's one signal that I think a lot of, if you're going to be trading meme stocks, you might want to at least try to learn about. I'm not associated with this website. It's just one of the first ones that came up on Google when I actually Googled, and what I want to talk about is the high and tight flag. A high and tight flag is like a continuation of a bull flag. And the reason that you want to look for these is, to me, that's what GME was on a couple occasions. There's this one, and this one. The most notorious one, at least for me, was March 10th, because I actually was able to nail, I skimmed the top of that. I sold near the top on that one. And that being said, the reason why, and I knew the downturn was going to be so violent, was high and tight flags they require a lot of volume, a lot of options, a lot of, basically movement. Always momentum, sentiment, all of it has to, there's like a checklist that has to be ideal. But I look for these because these are what, can get you pretty decent gains. Again, it's a chart of what could be, not what has to be. And the reason I bring it up is because we're in a bearish market right now. It's going to be very hard for it to pull itself out, any of these, even if they do have the appropriate signal on the chart. It's not going to go well. I use a lot of AI and machine learning in my own trading. The one thing I always do stand behind is it never got to the levels that people think. Like, people think it can hit, and again, no offense to anyone, but I'm not a believer of MOASS. I have yet to see one of my machine learning models break out past 1,000. Like, it hasn't yet. So until that happens, I'm going to be very pessimistic on that idea. The highest it ever got, even when I was pushing the boundaries of it, was roughly in the 800 range back in January, so 2021. So that was, obviously interfered with the whole buy button being removed, as people call it. I'm apolitical. I mean, I don't think it was fair of them to remove the buy button, but I'm not going to go out of my way to like cause a ruckus over it, because I just keep trading. If I'm able to trade successfully around the crutches that they give me, then I'm going to keep doing it. Just as an FYI update, the last model I ran for rerunning the January 2021 only got up to 680. It was mid 680s. So I really don't see what everyone is hoping for on manifesting. Everyone's talking about the dividend, or the dividend stock split, as they want to call it. To me, it's dilution. It's the same thing, no matter how you see it. It's a breakdown of the percentage of the pie, but you still, your investment's still the same. So that, to me, my question to everybody is, why would I not wait till after the split and then buy, if I think the split is going to cause it to MOASS or whatever the theory is now, because it keeps changing. The one thing I will bring up, and I think this is important, is everyone should always look up their own data, because certain things, like, some people won't tell you, which is everyone cries about XRT, but then when I go and ask them, well, what is 60K shares going to do? That's not really that much. Another tool I'm going to leave you guys with is called Alpha Spread, right? And what you can do is you can do what's called an intrinsic value lookup on it, which it has this like built-in little calculator that tries to do a discounted cash flow estimation of your company. It's usually good to go look at it right after an ER, like a couple days after an ER. And the reason why is because usually it's updated with the financial statements. And then you can go look and see what what is your company allegedly worth. And if you go look at this, you'll see that GME is only valued at, the base scenario is 39.88, right? So right now it's considered that it's overvalued. The price it's trading at, it's considering it overvalued. If you go look at the DCF, it's 61. And then if we go even plugging in bull scenario, it's still only showing it up to $70. Now, this is the type of stuff that should make everyone consider what they're investing in. If we go and change it, let's go look at AMC. And if you notice, the base value again, $12.33. And the bull scenario is $21. So, the bull scenario isn't terrible. That's for somebody that wants to invest in, fundamentals and all that in long term, and isn't here for the meme squeeze, oh my God, I'm going to make $1 million per share thing. That being said, you can go and look this up on your own and plug in your own companies. I actually, I used a free plan on these. And then I'm going to touch upon one more. The BBBY base scenario is $12.63 and the bull is $18.53. Now, this does not take into consideration huge catalysts such as if they did sell off the baby, or if they split it off or whatever. That's completely separate valuation. Again, this is just a script that the website runs that is somewhat based off DCF and a couple other factors. Again, intrinsic value, if you want to look it up, Investopedia is your friend, DCF as well. The last website I would share with you is SimplyWall.st. Again, I use a free account. The thing that worries me, even if you're playing for what seems to be a meme squeeze play, is the health of a company is not doing so hot as of late. And everyone's gonna say, oh, they got this much money on hand, etc., etc. And it's like, yeah, but you got to make use of that in the correct way. So their short-term liabilities, again, this is where the money comes in. They're not in debt anymore. Perfect. The problem is, what do they do going forward? And that's where you need to be able to pull this out of, the hole it's in. And everybody says, oh, they have plans, they have RC, they have this, that. He seems like the type of investor that ICANN is, which that's not necessarily a good thing. They run into a company, they presume that they're going to fix it. They make a lot of money off of basically running it up and down for a couple times. They take it for a couple rides essentially, and then they let it die or whatever, sell it to someone else that has more interest in it, usually on its way out, when the company's on its way out. The one that comes to mind is ICANN with, I think it's TW Air, if I'm not mistaken. So definitely the corporate raider mentality strikes me as odd, that people are now fawning over it as if it's this rock star attitude, when, again, if you're in it to make money, then you might want to consider that, because it doesn't seem like it's very much in your favor. Now, the magical question everyone always asks whenever I do any of these updates is, where is it going? Like, where is it going to go? If you look at supply and demand, we're in what's considered in the past was one of the zones, at least for demand. I don't personally think it'll, because of the way the market's going, I'm bearish on the macros, so therefore I'm bearish on a lot of individual stocks. Absent maybe if they have some sort of stellar ER that's game changing or whatnot. So we're about to hit a demand zone in the high 80s, like mid to high 80s. So there might be a bounce, but personally, again, I'm not in any of these meme stocks. I'm not buying. This is not a buy time for me. Absent that, we are a little bit in a free fall, because you have to look for the next area that it based at, which wasn't until back here in February, which was, I believe it's in the high 60s area. It looks like 70 flat. It looks like 70 down to mid to high 50s. So that's another $20 of channel that's below this one if this one doesn't catch, which again, I'm bearish on a macro. That's up to everyone else how they want to look at everything, but overall, this is the intuitive cyclical smooth RSI that I was talking about, and if you notice, it's having a hard time breaking upward, so it gets rejected, and we're definitely looking to go down along with the macro. The last thing I can touch upon is the live flow recently, which just to give you guys like a quick view of that. Here we go. So I'll leave it on this note. I'm still bearish on the millions per share. I'm still bearish on it, period. Again, I have no position in any of the three basically I'm not playing anything. I got out in July. I liquidated a lot of my positions in July. Slowly, roughly from around July to October, I started moving things out into more cash and just day trading. So if I get something like 10% on an option, on, let's say I buy 5 or 10 calls on something and I get 5 to 10%, I'm out. The market's a little too bearish right now. It tends to turn on people too quick. The chop is real, and I don't need theta killing any of my options, the profit on them. So definitely I pulled out quick because I want to secure the profit. And I don't force trades. If the market looks too choppy or looks like too hard to time or catch, clock out, go do something else. This is a very bearish market, and I think a lot of people that aren't used to trading this are going to find out really fast, especially if they're playing options and they're not well experienced. So definitely always do your due diligence, check any website you need to, and always, question what people are putting out there on both sides, bearish or bullish. I even tell people to question what I put out there. I'm trying to give you the data so you can, double check and try to make sure you're at least on the right side of a trade, not necessarily the right price or X or Y or Z, but at least on the right side of a trade. But that's all I can do. I can put data out there. If somebody wants to listen or they don't want to listen, then that's on them. If they want to go against the grain, they're that fish swimming against the current. Right now, again, going long in a single stock when the macro is bleeding, to me, seems a little counterintuitive, but I do personally do it myself, but it's for such small periods of time that, again, it's not for going for millions per share or anything. So I wish everyone luck. I do not wish anyone anything ill, no ill intent. It's just, I think some people need to be grounded. So again, the movement that's going on to me is very natural. A lot of people are complaining that it's, the usual, the fuckery or something. Everyone talks about the dark pools, and it's like, if you want to bring that up, well, here it is. I literally have, it pulled up, and it's like, you could too. I mean, I'm not trying to say you should go and pay for this service, but you can definitely go out there, and there's many services out there where you can find this information out, and then you won't be saying, you won't be tweeting at Gary Gensler on Twitter and yelling at him or whatever. So everyone stay safe. I wish you the best of luck. As soon as this video is over, I'm gonna save it on the YouTube for anyone to go over if they want on their own time, slowly, whatever. And I'm also going to try to add the links afterwards, so check back and I'll try to add all the links that I was trying to recommend on there. As always, good luck everyone and stay safe.